APA Corporation is an upstream energy company focused on exploring and producing oil and natural gas across key regions, including the United States, Egypt, and offshore areas. Its business is highly tied to commodity prices, meaning earnings can swing significantly with oil and gas market cycles. This makes APA both a high cash flow opportunity during strong price environments and a volatile stock during downturns. Investors tip APA's latest income statement suggests a company that is becoming more profitable despite declining revenue. The revenue drop reflects weaker realized pricing and/or production softness, but stronger margins indicate improved operational efficiency. Net income has rebounded meaningfully compared to prior periods, showing cost discipline and favorable cost structure adjustments. Operating income strength suggests APA is managing expenses well, even in a lower revenue environment. Overall, the momentum is mixed. Profitability is improving, but top-line growth remains under pressure. For investors, this creates a balance between strong cash generation and cyclical revenue risk. APA's expense structure is heavily driven by production and exploration costs, rather than traditional R&D. Recent results suggest disciplined cost management, with operating expenses either stable or slightly reduced compared to revenue. This has helped expand margins even in a weaker revenue environment. The key driver remains field-level production efficiency and cost control per barrel of oil equivalent. Overall, spending appears supportive of profitability rather than a drag, which is a positive signal for earnings stability. APA's future growth will largely depend on energy prices rather than strong organic demand expansion. If oil prices remain stable or rise, the company could continue generating strong free cash flow and earnings. However, revenue volatility remains a structural risk due to its upstream business model. Production efficiency improvements and asset optimization will be key to sustaining margin. Overall, momentum is stable, but APA appears moderately undervalued compared to broader energy peers, especially given its strong profitability recovery. However, the discount reflects revenue volatility and commodity dependency. Recent earnings strength improves the valuation case, but the market is still pricing in cyclical risk. Compared to peers, APA sits in the lower to mid valuation range, which may appeal to value-focused energy investors. Price targets for APA are heavily tied to earnings cycles rather than fixed growth assumptions. A strong buy zone typically appears when the stock trades at depressed earnings multiples during stable oil prices. Good entry levels align with current valuation discounts where downside risk is already priced in. Overvaluation tends to occur when energy prices spike and sentiment becomes overly optimistic. This makes APA a cyclical valuation play rather than a steady compounder. APA Corporation shows a clear improvement in profitability, but declining revenue limits the strength of the overall growth story. The company remains highly dependent on commodity prices, which adds uncertainty to long-term forecasting. For long-term investors, APA is attractive as a cash flow and value play, but not a consistent growth stock. The thesis